Good morning to all. Uh, am I audible? Sound is clear? Just, okay. Great. Yeah, thanks. Okay, we'll start our webinar, and thank you all for joining our webinar on auto components on this Saturday morning. So the main idea of discussing on the auto component side is that so the coming 5-10 years, I think this sector, I think we are expecting a lot of changes happening due to changes at the technology level. So as we see that more and more as electric vehicles and hybrids see their share of uh, market share increasing, so it will reflect on the auto component side of the uh, market also. So that's the main idea in terms of looking at this sector. So for today's webinar, so we have categorized into three parts. First, we will generally discuss about the current market size, and we look at various key segments in terms of exports, OEM, and aftermarket of the auto component side. So this will be the first part, and the second part we will broadly we look at various types of new energy technologies. So we have like hybrids, we have pure electrics, we have plug-in hybrids, strong hybrids, and then with India, I think uniquely we are additionally focusing on CNG, and similar to Brazil, we also want to increase our share of flex fuel vehicles, majorly by blending higher share of ethanol, or it's running purely on ethanol. So second part will mostly discuss on how this new energy technologies in terms of powertrain is evolving, and in the last part we will look at purely on the component side with electrification, which are the key components that will gain market size, and over the next 10 years, what are the key areas that as an investor we should be focusing on. So that's broadly the contents of the webinar. So we'll move to the first part. So in terms of industry size, right? So currently, as of last financial year, auto component industry as a whole, total sales, cumulative sales was close to around 6 lakh crore, and last year they grew at around 10% in terms of growth. And so expectation is that over the next couple of years, Indian auto component industry will be like one among the top three globally in terms of size. And so out of this 6 lakh crore, right, total sales, uh, predominantly it goes into three types of sub-segments. One is do the sales to the OEMs. So OEMs are the vehicle manufacturers, and second to the aftermarket, and third to the exports. So we just break up the 6 lakh crore sales into these three sub-segments. You can see that OEMs are the major share. So out of 6 lakh crore of sales, close to 5 lakh crore sales goes to the OEMs. So this is direct sale to the OEMs. So either the component companies can be a tier 1 supplier or a tier 2 supplier. And so over the years, last 10 years, the growth rate has been around 9% for the OEMs market. The second largest is the exports, close to 1.7 lakh crores of exports, and exports predominantly we will look at deeply in terms of where we export and what components we are exporting. But from here, I think the government push towards manufacturing advanced technology components. So we have a separate PLI scheme. So and also the steadily the increasing manufacturing footprint. I think we see that last 10 years the exports growth has been around 10%, but over the next 10 years, I think this growth rate could be little bit higher than the other segments. And the third segment is the aftermarket. So aftermarket is what the spare sales that usually goes to the services or the used car market, used vehicle market. So this is like a 1 lakh crore kind of market size, and the growth rate has been around 9%. And we do substantial amount of imports also, because there are certain components where the localization is very minimal, or due to size constraints, or being a suboptimal market size. I think especially with BS6 uh, coming in lastly, so the components that goes into BS6 are still in the stages of localization. So these kind of components we are currently majorly importing, and maybe other components which are just entered the Indian market. Like suppose sunroof, right? So sunroof, if you look at 10 years back or 7 years back, the penetration rate to be in 4-5% of the market. But in the last 5 years, there has been a substantial increase in the share of SUVs, and also in the share of passenger vehicles coming with the sunroof. So, so currently these are the kind of components that we are importing. And going forward with EVs, right? The prominent share of component within EVs is the battery cells. So currently, that is we are in process of setting up the battery cell manufacturing. Various players have applied for the PLI schemes, things, etc. So at least in the near term, next 2-3 years, I think we will also see a substantial increase in the imports in terms of battery cells and chemicals. So that's broadly the uh, uh, 3-4 market segments we have seen. So moving to next slide. So we have seen in terms of market segments. Now, if you look at it in terms of components, so out of the 6 lakh crore, almost 1/4 uh, of the entire industry is focused on the engine components. So this is one important data point, because as we move away from internal combustion engines to new energy powertrains, so this 25-26% of the entire market uh, will see a substantial erosion in value. While if you look at other components, right, some components like suspension, braking, so these components will be relevant in the upcoming new energy vehicles also. So then, if you look at electricals and electronics, right, currently it forms around 12% of the entire market. But what we see is that this has a substantial potential to increase. So there are 2-3 factors that will drive this increase in electronics and electricals market share, because as more and more customers are preferring towards buying premium vehicles, so obviously those kind of vehicles come with a larger share of new electronics within them. Either it can be a 360-degree camera, or etc., like something like that. So this portion of electronics looks very much interesting, and their growth rate will be much higher than the other components in the next 5-10 years. So that's from the breakup from the component side. If you look at breakup from the OEM side, right? So predominantly almost around 45% of the market is towards passenger vehicles, and the second largest will be the two-wheelers, and then the commercial vehicles, followed by commercial vehicles, put together light commercial vehicle and medium heavy commercial vehicles. So that's broadly the market segmentation. Uh, so just the sales to the OEMs of around 5 lakh crores. So what are the key drivers has been that for the last 5 years we have been seeing that the auto component companies are saying that the content per vehicle has been increasing. So this main reason would be that as we moved from BS4 to BS6, so the change in regulation has enabled need for components on the emission side, etc. So especially those companies which are heavily into engine side. I think they have seen a substantial increase in content per vehicle. Second is the government's thrust on localization. So, for example, if the vehicle has to be qualified for a subsidy scheme, so earlier we had FAME and now we have the PM E-Drive scheme. So then at least 50% of the vehicles components has to be domestically sourced. So government's thrust on localization is also providing a key driver to the component industry who are supplying to the OEMs. And third most driver is that shift in the passenger vehicle mainly towards SUVs. So we have seen that over the last 5 years, especially post COVID, the share of sedans and share of hatchbacks has dropped considerably, and every year they have degrown. Well, at the other end of the market, especially on the SUVs, SUVs is now like almost 55% of the Indian passenger vehicle market, and so Indian market is quite unique compared to the rest of the world, because we have created some unique within the SUVs, like micro SUVs, compact SUVs. So this kind of segment doesn't exist in anywhere else in the world. Um, so, so most of the currently the data shows that even the first time buyers are starting and buying with the compact SUVs or micro SUVs as their first car. So these are the 3-4 things which are driving the sales to the OEMs. Next on the aftermarket, it's like 1 lakh crore market size, and basically the aftermarket is mostly towards the supplying for the service and spare parts for the service segment, and also mostly the used vehicles. And so here the growth rate more or less last couple of years, there has been a better growth on the used vehicle side, because some segment of customers who are inclined to buying a new hatchback are now shifting towards used SUVs. So that's one kind of customer shift that has been driving the aftermarket sale of components. So this is a couple of key drivers in aftermarket, and this is a important slide with respect to exports. So as we saw, exports is like around $20 billion that lastly we exported. And one interesting data point is that in the last financial year, India's overall merchandise exports saw a degrowth. At the same time, we have, at least in the auto component side, has been like a 5% growth. So that shows that how the relevant of auto component industry in terms of gaining market share globally. Even if you look at if you're tracking some of the major auto component companies in their quarterly conference calls and their agents, what they are saying is that as globally the supply chain consolidates, right? I think major companies from India are looking to gain more market share from the global developed auto component companies. So that's what there has been a good amount of market share gains that's pushing the export growth. And we do also have a good share of imports. So, but even net, if you see that on the auto component side, as a country, we have a trade surplus of around 300 million USD. So that's only on the exports. And we look at the breakup of the exports. So the two key major regions that we export is to the North America, which forms around close to around 30% of the total exports, and followed by Europe, and then Asia. And in terms of components, the major export component has been the transmission side and steering, followed by engine components. And year over year also there has been no major changes in terms of racks. So here what you're saying is that in the next 5-10 years, uh, so globally developed markets have been moving rapidly towards hybrids and EVs, while Indian market will be slow in terms of adoption. So in terms of EVs or hybrid penetration will be slower in the developed market. So what will it will develop is that more and more supply chain for the ICE components will be from India. So that will be like a opportunity for the next, at least for the next 10 years kind of thing. So globally, more and more companies will be sourcing ICE components from India. As auto component companies in India will have a local market share, plus they can export. So that can be a new opportunity area. In terms of imports, again, so interesting data point is that our major share of imports, like close to 2/3 of our imports, comes from Asia, and that's predominantly from China, and followed by Europe and North America. North America is just 8%. So that's broadly on the import side, and in terms of components, also there is no major changes. So engine components and drive transmission are the two major components that we import in terms of value share. In terms of countries, we have seen that our imports, especially if you see that it's the major share comes from China followed by Germany. On the exports, it's completely different. US is our top trading partner in terms of exports. So that's broadly with respect to what is the size of the industry and what are the four different market segments that the industry is supplying, and how has been the growth rate over the years. So going forward, if you have to look at some of the key factors that has played the growth, is that one is that, like I mentioned earlier, the emission norms. So we had BS4 and we are graduating from BS4 to BS6, and then we're also having CAFE norms and CAFE phase 2 norms, and so as an as when the government's regulation becomes more tightens, right? I think we are expecting next. I think we are also in line with the global standards. So as Heroes 7 emission norms comes, I think we are also in line with graduating to BS7. So in that line, this regulatory driven market is going to be one key factor for the entire industry. Next, for the safety. So here we have seen that for the vehicles, for example, two-wheeler bike above 150cc, there is a mandatory for ABS and things like that. And for the passenger vehicles, government is pushing for a. So earlier, government made it mandatory for a driver side airbag, and they also had plans to have minimum 6 airbags in all the vehicles. So this is, on one side government is pushing, but on the other side, even if you look at the currently the customers' mentality towards picking the vehicles which are more safety in nature, I think this has become like a more of a marketing also. Yes, you have seen Tata Motors, which has focused heavily on this segment in terms of safety, and they have brought products which are of more in terms of safety standards, which are like 4-star or 5-star products, and they have gained a goodwill in terms of customer minds. So both from the customers and the government, I think there will be additional thirst in terms of bringing more safety into the products. So this is the second area in terms of driving the growth. And the third is that this is a new segment, new growth driver we are seeing post-COVID, which is the premiumization. Not only with respect to the auto side, we are also seeing with respect to the other consumption side also. More and more people are preferring the premium products. So here it will be the shift from hatchbacks to SUVs, or within even we are seeing that even hatchbacks are now starting to come up with sunroofs and alloy wheels and etc. etc. So premiumization has become a new driver of growth for this industry, and so we have to see that most of these premiumization components are doesn't have much manufacturing capacity as of now in India. So we are seeing that lastly into couple of years, we are seeing component companies or forming JVs or putting up manufacturing plant to manufacture these kind of advanced technology components. So this has become a new growth driver for these companies in addition to their existing core product. So this, so we have broadly classified the growth drivers in three different buckets, so it's very easy to understand. That's broadly we have covered the market and heaters. Now next we will go to the new energy ecosystem. Within the new energy ecosystem, what we mean is that the engine from internal combustion, petrol, diesel focused kind of powertrain, we are moving towards more of a lower emission and environmental friendly powertrain, that is starting with CNG, then flex fuel, and then hybrids. Within hybrids, we have strong hybrids, mild hybrids, then plug-in hybrids, then comes the pure battery electric vehicles. So that's broadly the new energy ecosystem. And so compared to the developed countries, right, the expectation is that we over the next decade at least we will have a market split evenly between most of these powertrains. So in the developed countries and China, I think most of them are focused just on the EVs, and EVs is just their own focus area. And but lastly, in the last couple of quarters, we have seen that even in the developed countries, OEMs are focusing much on hybrids because there has been some downturn in terms of growth on the EVs. So customers are moving towards hybrids. Uh, so within India, our expectation is that along with this electric and hybrids, we will have a complete new ecosystem in terms of CNG and biofuel, that is flex fuel or ethanol blended fuel. And hydrogen could be relevant for a certain segment like commercial vehicle side, because we have companies are developing the hydrogen ICE engines. So with the existing ICE engines, hydrogen as a fuel they are developing, and the hydrogen fuel cells will be a completely new technology that may come after a decade, but not anything now. Uh, so that's the broadly expectation on the new energy vehicles. And yeah, so close to 9 different powertrains is expected to be in India. If you go back at least 10 years back, right? We might have had petrol, diesel, and then CNG for a small share of CNG. But over the last 10 years, we have seen that there have been a couple of segments where CNG has become a predominant market share, especially for three-wheelers, right? Three-wheelers, passenger vehicles, CNG is the largest market share. And even in passenger vehicles, currently, you see the market leader Maruti. So one third of their sales comes from the CNG powertrains. So that shows that over the last 10 years, CNG has gained substantial market share in some segments. Uh, so going forward, we have seen that even a couple of months back, we have seen Bajaj Auto launching their CNG bike, and expectation is that more and more OEMs are planning to launch a CNG two-wheeler. So CNG ecosystem is developing, and second flex fuel. Uh, so with the government's thrust in terms of diversion of sugar towards ethanol, either it can be sugar or also on the maize side. So, so interesting point is that Brazil, if you look at Brazilian car market, I think they are the pioneers in terms of flex fuels. So uh, they predominantly their passenger market is driven by flex fuel vehicles, but we may not go to that extent in terms of market share only by the flex fuel. But flex fuel can be uh, the blended nature will be like upwards of 20% is possible in the near term. So that's could be the relevancy of flex fuel vehicles. And so EVs, as I mentioned, there will be a lot of segments within the EVs. So 9 different powertrain technologies are going to exist. So this brings up more amount of complexity to the entire auto component supply chain. So just imagine an auto component guy was supplying to a petrol or diesel. Now he has to focus on all these extra 5, 6 additional powertrains. Whether he has to see that whether his component is relevant to this upcoming new energy powertrains, etc. So there is an opportunity. At the same time, there is a lot of complexity which has come into the system. So that's where it's very makes it very interesting in terms of to study this sector. We might see a lot of new opportunities in terms of components emerging, and those components will be substantially different from the existing components that the company is manufacturing, and both in terms of value, in terms of quality, etc. So uh, this is the history in terms of this is some historical data. So if you look at the passenger vehicle, you can look at the CNG. Uh, 2018 share of CNG was just 2%, and now you can see that the share has almost reached close to 17% share. At the same time, if you look at diesel, right, diesel has gone from market share of 40% to 70%. So now, in the current financial year, right, both diesel and CNG has an equal market share. So it's a very interesting data point. So this is on the passenger vehicle side. If you move to the commercial vehicles, right, here also we have seen a substantial changes. As you can see that, within the commercial vehicle, broadly we break up into light commercial vehicle, heavy commercial vehicle, and buses. So within the light commercial vehicle, you can see that 2019 it's completely diesel dominated market, and last financial year you can see that there has been a substantial drop in diesel share, while the share of CNG, LNG has gained substantially. While heavy commercial vehicle, the medium and heavy commercial vehicle continue to be diesel dominated. And coming to the buses, again here there has been a substantial movement, but not to the extent of the light commercial vehicle, but you have seen good amount of share moving to the CNG and electric. But buses next 5, 10 years, the recent PM e-drive scheme is pushing more amount of electrification on the buses side with the state transport units. Actually, buses there is a good amount of subsidy being offered, so we will see that buses moving more and more towards electric. Coming to the two-wheelers, so one segment where electrification is adopting at a higher, fastest growth rate. Last financial year, we have ended with a penetration of close to around 5%. So entire two-wheeler market in terms of volume is that at peak we had close to around 2 crore units, that is 20 million units. Last year we are just close to that, but this year we are expecting that at least we will break the FY19 highest volume of 20 million units. So out of that, a 5% penetration is a very decent number, because pre-COVID the EV penetration in two-wheelers was negligible. And so during these 3, 4 years, we have seen a substantial market in terms of consolidation. So even the incumbent OEMs, ICE focused OEMs also have entered the EV space, and they have got a substantial market share. So let's broadly in terms of how the market is shifting in terms of powertrains. So these are third part in terms of discussing on the component side, and within the components how the ecosystem is evolving on the EV side. So traditionally, if you look at the auto OEM, the auto OEM will be supplied by a tier 1 supplier or tier 2 supplier. This kind of system has been in existence for last 3, 4 decades. But currently, we are seeing within the OEMs there are new startups which has come in, and they have garnered a substantial market share. For example, Ather or Ola, especially on the two-wheeler side. Four-wheeler side, we haven't seen any new major new OEMs coming in, but on the two-wheeler side, we have seen a couple of major new startups which have gained a substantial market. But the workings of this new mobility OEMs is substantially different from the existing. So starting from the production, so they are building up a vertically integrated kind of structure. So where they manufacture the key component themselves and then assemble it. Well, traditionally in the ICE side, the structure is that the auto OEM will be more and more focused on the R&D side and development side and then assembly side. So entirely the manufacturing of components will be outsourced. But EVs, our expectation is that uh, as companies focus more and more on vertical integration, that's where they get an edge over the others in terms of in the product development or in terms of differentiation what they can bring into their products. So that's the broadly ecosystem level basis. So yeah, within the EV ecosystem, the the major share of value is in the batteries. So batteries, the entire supply chain starts with the chemicals, or the it starts with mining key uh, materials like lithium or nickel or manganese or uh, these kind of minerals. So here, I think our presence in terms of component companies are very negligible because the entire supply chain has predominantly close to around 70-80% has been dominated by China. So on the battery side, on the right from minerals to chemicals and then cells, currently the supply chain is big. Globally, it's been dominated by China. So currently, in terms of auto component companies focusing on sales is very low in India. But with a separate PLA scheme for the advanced chemistry cells, uh, we are seeing that existing auto component companies and new age OEMs also putting up battery cell manufacturing system. So this will come on stream over the next 2-3 years. So we will be seeing more and more localization of the battery cells from Indian component players. And if you move from battery cells and battery packs to the component side, so 3-4 major components will be the after batteries, it will be motors. Motors with motor controllers and then the BMS, what they say is battery management system. So these are like apart from battery cells, these are three major components where even the OEMs are focusing on developing it in-house, or major component guys also focusing on localizing it or forming joint venture in terms of manufacturing these major components. So that's only we will look at in depth on the battery side first. So yeah, uh, if you look at the current status of these components, so where we have most localized these on the which are the components which are commonly shared with ICE, right? Basis on the chassis or body parts or on the cooling side, and on the motors and controllers we are mostly localized. But in terms of high value components, so battery cells, battery packs are like 40-50% of the entire cost of the EV, which is still imported, and on the electronic ECUs and BMS are also predominantly imported. So this will be the emerging areas for the component guys to put up own manufacturing in India, and since 50 more than 50% of the share comes from these components which are least localized. So just taking on the so currently EV component market size is around 20,000 crores only. So we have seen that entire market size is 6 lakh crores. Out of 6 lakh crores, EV component market size is just 20,000 crores, because our penetration of EVs is just 3-5%. So similar to that trend, that's where the EV component size also. But expectation is that the growth rate will be substantially higher for this segment of components than the ICE, so that we will see that by 2030 this will be crossing more than a lakh crore in terms of size. So from 20,000 crores to 1 lakh crore and more, so 5x increase in size. this 80,000 crore of incremental market opportunity exists for the existing auto component companies. And so currently, you can see on the left side of the screen where there is a segregation of in terms of components, in terms of how it will be impacted as market moves more towards EVs. So, which are the components which are favorable is that, of course, battery packs, EV drivetrain, electronics. So these kind of components will see more and more increasing size, while components like which are engine dominated, uh, it can be radiator, gearbox, or pistons, spark plug, crankshaft. This will see a substantial erosion in value. In the middle right, there you see components like suspension or braking, lighting, seating. So these components are common to both ICE and EVs. So those component companies who are present in the middle segment, which are present in components which are neutral to any powertrain, I think they will come off unscathed in this transition period. So they will be much more steady in terms of their numbers and balance sheet. While companies which are in the bottom unfavorable products, I think they have to evolve and produce and get into more and more new components, either on the EV side, or I think they will see if they are not able to adapt, I think they will see a substantial value erosion in these companies. So when analyzing the auto component companies, you have to see where they are at present and does they have the requisite technology to move up the ladder in terms of safeguard their business. First, on the component side, will be the batteries. So broadly, expectation is that the total amount of demand in India in the next 7 years will be like close to upwards of 150, 160 gigawatts of battery capacity is what being required, especially on the mobility side of the market. So here, so at present with the PLI scheme, companies are focusing at the cell level. So yeah, the raw material has to be mostly imported because we don't have local sources. So once the raw material is imported, I think the cell level is what the companies are currently focusing on. And after that cell, currently, I think most of the companies have this battery packaging. So if you look at the batteries, first starts with the raw material refining and then goes to chemicals, and then chemicals, they make cells out of those chemicals, and then the cells gets packed. That's where the battery pack comes in. So currently most of the battery packs in India are done domestically. So packing, we have a good amount of system that has been in place. So finally, the recycling will come at the end. That is also very interesting and uh, would be a much higher growth sector as more and more market shifts towards EVs and batteries. The end of life cycle batteries, either it can go to a second life stage in terms of stable or a storage system, or it can be recycled for a new mobility site. So within this supply chain, one more key important factor is that what kind of chemistry that the component guys are getting into, because we are in the very nearly early stages of this electric powertrain. So as and when the chemistries moves, we will see auto component companies has to have its own R&D to develop new chemistries and develop. So we will look at a couple of existing companies, what they are doing on this battery side. So Exide, Amaraja, we know that both of them are market leaders in the lead acid batteries, and both of them have started their ventures on the lithium ion cell also. For example, Exide, they are putting up a lithium ion cell manufacturing plant in Bengaluru. Here they have tied up with a Chinese company called ithought, and currently, initially the phase one, I think they are capacity is close to around 6 gigawatt. And if you break up this 6 gigawatt of capacity in terms of battery chemistries, right, it's like split 50-50 between the NCM, what they call is nickel, cobalt, manganese chemistry, 3 gigawatt, and LFP, so lithium ion phosphate, these 3 gigawatt. So currently these two are the major chemistries globally also being followed. Uh, and LFP is much more preferred in India because most of the raw material that goes into LFP can be completely domestically sourced. Uh, and as technology improves, I think LFP could be a favorable chemistry as far as India is concerned. Coming to Amara Raja, unlike Exide, they don't have any technical collaboration with any global players. So they are developing it in-house, and they have planned a capex of close to 10,000 crores. And similarly, over the next 10 years, they're planning like 16 gigawatt of capacity. And the third player in the segment is Ola Electric. So they are just, as I mentioned earlier, being a new age OEM. So they are vertically integrating their manufacturing supply chain. So right from cells, they want to manufacture it. So they are setting up a gigafactory. Already they've started, they've completed the phase 1 of the gigafactory, and it's like around 1.4 gigawatt is the phase 1 capacity. They've completed it, and gradually they want to take it up to 20 gigawatt of capacity. So these are a couple of players who have already started or in process of setting up battery cell manufacturing capacity in India. So after batteries, right? So what comes next is that BMS. That's called battery management system. So BMS is generally it's called the brain of the battery pack because BMS is what keeps the entire battery system operating at an optimal level. So so currently we have two different kind of BMS system. One is called smart BMS system, which is completely imported mostly, and basic BMS system we have localized sources. So smart BMS system goes into premium vehicles and things like that, and basic goes into the economy segment of the electric vehicles. And even in BMS, either the companies are trying to have their IP in-house and then outsource the manufacturing, or they've acquired startups in this space. For example, Endurance has acquired a startup focused on BMS product. So this is what the happening on the BMS side, and motors. Of course, I think this is one component where lot many component companies and startups have emerged over the last 4-5 years. If you go to any EV expo, you can see that at least there will be like 50% of the most of the companies will be focusing on motors and motor controllers. So very highly competitive segment, and it's been at the evolving stage. So it's very tough to operate in this segment. So within the components also, we should be very careful in terms of where the company is focusing its energies and where they are allocating their capital. So that's broadly after batteries. These are the three components which are in terms of higher value share. And the other components on the electronic side and the electrical side is that so these are like a new set of components which are not present in the existing ICE supply chain. Either it can be a onboard chargers or off-board charger, or on the converters. So DC-DC converter where the power gets converted from the batteries to the various components, etc. This will be a new area for the entire component companies. So those component companies which have R&D already presence in the electrical side or electronic side, I think they will be able to take advantage of pouring into these new age components. Uh, this is the third area in terms of opportunity, which is on the lightweighting side. Uh, so with EVs, across segments, OEMs are focusing on bringing down the weight of the vehicle. So just by bringing down the weight of the vehicle, it increases the range offered by the vehicle. So lightweighting goes into the body frame as the more and more aluminium castings are being preferred, and within the chassis also I think one lightweighting of the components preferred, and having a dedicated platform for the vehicles. So at present, if you look at the passenger vehicle on the electric vehicle side, most of the products available are the electric version of the existing ICE platform. Whether it can be an Exxon or a Punch, 50, that's a modified version of the existing ICE platform. But over the next 3-4 years, we will start to see vehicles which are building ground up on a pure electric platform, which is called a born electric platform. So this will result, this will open up new areas on the lightweighting side for the auto component companies. On the at last on the this is the transmission side of the electric vehicle. So e-axle means that this as a system, it will have the motor, it will have the inverters as a system. So instead of supplying motors alone and getting inverters separately and then assembling it, component companies are focused on, especially the global component companies like Bosch or Zeta. They are very much focused on developing transmission as a single system, and so this is a very highly valuable and highly technological component. So this could be a very interesting focus area, because here the competition will be very minimal for the existing companies. Because unlike just supplying a motor, if you're supplying the system as a transmission, it's a highly technology oriented, so competition is minimal. The margins can be higher than the entire industry. So last on the component side is premium. So here you can see that in the last 5 years, as more and more people prefer the premium and luxury segment of vehicles segment, we have seen the share of automatic transmission going from 17 to now 23%. It's expected to cost close to 40% in next 3 years. On the sunroof side, as I already discussed, uh, our penetration in sunroof was close to 4-5% 5 years back. So now it's 25% and expected to be 40%. So currently 1 in 4 cars comes out with a sunroof. So next 3-4 years, maybe 1 in 2 cars will have a sunroof preferred by the customer. So also you have to look at the kind of value these components brings in. So normally you can see that the automatic transmission cars are priced minimum of 50 to 80,000 rupees higher than the manual transmission. Similarly, if you look at sunroofs, a single sunroof costs upwards of 25,000 rupees per unit. So not only these are uh, more and more premium focused, but also high value component, high technology involved. So for a component company, this could be like a very attractive areas to look at. So similarly on the lighting side, so the penetration on LED has been substantial, especially in the, if you look at the new age EVs, mostly they come out with LEDs and alloy wheels and digital instrument cluster. Uh, uh, so this instrument clusters, even on ICE side, what we are saying is that more and more existing ICE vehicles also transitioning towards digital clusters. Uh, so here, compared to the normal analog clusters, you can see that the value of a digital or TFT cluster is multifold, minimum 2 to 4x in terms of value. Uh, so this whole premium agenda brings up with a good amount of opportunity, and companies like Minda Corp or Gabriel, I think they are pouring into this premiumization journey. Lastly, an outlook expectation is that the market growth will be on the OEM and aftermarket will be in line with the market growth of 6-7%. But exports, the expectation is that it will be in at least in double digits, as and when globally with the consolidation of the supply chain, the Indian auto component companies will gain more and more market share. So that's being built into this kind of double digit growth. That's broadly the outlook. Yeah. I think mostly we're done with the webinar. Last slide on the outlook. As we discussed, this summarizes the entire thesis. Uh, so the focus on alternative powertrain, focusing on the premium features, uh, more growth driven by the exports, and new opportunities on the software and the electronic side. Yeah. Broadly from our side. So, yeah. If you have any questions, just put it in the chat box. I'll be happy to take. Or you can just raise your hand. First question from Murthy Vijayendra. View on battery and vehicle recycling opportunities. Yeah, both are very in nascent stage. We are seeing that government, various state governments have started offering tax cuts on the if you're scrapping a vehicle. Lastly, even last week we saw that uh, if you scrap the vehicle which is pre 2003 or 2000, UP government is offering a registration tax cut of close to 70%. So scrapping, both from the central government and even the state governments are focusing on how we should incentivize vehicle owners to scrap their old vehicles, thereby bringing down the pollution levels. So scrapping policy has been in place. So it will take at least 5-10 years to get its ball rolling on the vehicle side. And on the battery side, of course, market is very low. And we have so EV share itself at 3-5%. So as EV share goes up to double digit, we will see a good amount of supply system coming on the battery side also, recycling. On the mining side, yeah, they have. So I think last year there's a news that we have substantial amount of lithium reserves in Jammu and Kashmir, but the auction has not been successful because so it has to be remunerative for the miners in terms of what the composition of the lithium resources that's been found. But as technology improves, I think even the composition that is found in J&K could be useful. And Vignesh, if you want, you can just unmute and ask a question. Yeah, you can unmute it.
Hello, sir. கேக்குது.
Yes, yes, yeah, yes, yeah. Audibly, please, sir.
இப்ப இருக்க நியூ ஏஜ் பிசினஸ் ஓலா அந்த மாதிரி கம்பெனிஸ் எல்லாம் எப்படி ஃபியூச்சர்ல இப்போ கிட்ட எவ்ரி குவார்டர் இயருக்கு 2000 crore வந்து லாஸ் பண்றாங்க. அவங்க வந்து லாங் ரன்ல சஸ்டெயின் ஆவாங்களா இந்த மாதிரி நியூ ஏஜ் பிசினஸ்லாம்? ஹலோ, கேக்குதா?
கொஞ்சம் வால்யூம்.
அதான் அந்த ஓலா ஏத்தர் அந்த மாதிரி நியூ ஏஜ் பிசினஸ் எல்லாம் லாங் ரன்ல சஸ்டெய்னிங்கா இருக்குமா அப்படிங்கிறத.
Okay. So what's happening is that இப்போ என்னன்னா so ஒரு 100 years we are just focusing on the ICE technology, that is the petrol and diesel engines. So இப்போ the market வந்து it's opening up for the diesel side. Sorry, on the electric side. So electric is become a new technology. So with the market completely moving from existing technology to new technology, this is giving opportunities for new players coming. And so within the new players, what we have to look at them is that whether they have the existing R&D and the technological capability to scale up their business. So we have to see them not just being the uh, uh, assembling of the components. Uh, if they bring in truly a R&D based product, and they can differentiate versus the existing products which are offered by the legacy companies, they can survive and they can grow. So capital hasn't been a constraint. We have seen Ola listing, and Ether is also planning to list. So capital side, there has been no constraint on them. It's just that we have to look at how they progress, how they do their R&D, how they also on the entire distribution side also. So how they provide service post the delivery of the vehicle in terms of customer satisfaction, because existing dealer network has been tuned very much for the ICE side, and legacy companies have mastered this dealer network and servicing. So they have the existing setup very well built in. Now these new companies come in, I think they have to be gradually, they have to just build this entire distribution dealer chain, so that they don't miss out on the customer satisfaction levels. Yeah, that's only on the new age OEMs how they should, how they can grow. Hope I have answered your question.
Thank you, Senthil.
Thank you. And so another question from Murthy is that whether consumer electronic companies transition into EV electronics play opportunities on the R&D side. So currently, I think consumer electronic companies, they are most focused on localization on the consumer electronic side. So there is not much. They are not focusing on this EV electronic side. Mostly the component companies are focusing on here. So that's what the current status is there. And on the R&D side, yes. So broadly, what uh, our analysis is that OEMs want to have their own R&D and in-house IP, because that's where they can bring out some differentiation to the product. Otherwise, it will be a Me Too product, and if they just assemble the components from the market, so we are seeing that if the component is very critical in nature, for example, a battery management system, OEMs are much more inclined towards having their own in-house IP. Uh, yeah, that's what our sense on the R&D side of the component that's being built up. Yeah, if you have any questions, you can just post it in the chat box. Okay, what about EV vehicle growth in other countries? So, so developed countries are mostly the market is completely passenger vehicle dominated. So the two wheelers are very they uh, low size in terms of developed countries. So they are, so there the passenger vehicle has been so till a couple of quarters back, most of the OEMs in the developed countries are focusing on the EVs, and they were planning to have a 5-10 year huge capex spend. Uh, and EV penetration has also been increasing over there. So similarly, if you look at China, right? China currently the largest player in the Chinese industry is BOED. So there you can see that. So it's, if you look at the sales mix of BYD, it will be dominated by the hybrids also, plug-in hybrids and hybrids along with EVs. So the EV share has been going up, but now in the last 2 quarters there is some stagnation in terms of growth. But with hybrids coming in, so but over long term, I think developed countries by 2030 will somewhat stabilize in terms of their share moving closer to majority in terms of EVs. Yeah. Thanks, Maharaja, for joining. Yeah. Thanks for asking questions. So, great. I think, yeah. Thanks, Raja. I think for the questions. Thanks everyone for joining us for this webinar, and um, thank you. Yeah. Bye. We close this webinar now.